And good morning, welcome to this Capital 5 Minute Morning Miner. It's another cold day. It's January 18th, Wednesday, middle of the week. Morning, Paul.
Good morning to you. Good morning to you. My hands are cold though from all the typing at the moment.
Yeah, a little bit of news out in the UK today, isn't there? I mean, one that I'll just quickly cover off because it's probably easier if I do it because it's a big one. But we had Antofagasta this morning, actually, which was pretty good. They've obviously got a lot of cost pressures at the moment down in Chile, and there's issues. But they're actually keeping their guidance and everything. And of course, if you want to play copper, which a lot of people do at the moment, Antofagasta is a very good way in the FTSE of playing copper. So I have to say that the stock's been running up quite nicely, it has to be said. Short term, it's run up from about 900p to 1700. So, I mean, do be aware that it's had a huge run, but it's been higher. And I think if you want to play copper, not a bad bet. Hey, Paul, I'm doing your job for you.
Yeah, I appreciate that. Thanks very much.
Yeah. Now, look, we also want to, because it is London listed, because we dual listed it, but our corporate client, Guanajuato Silver, has got a bit of news out today. So why don't you do that one, Paul?
Yeah, that's great. They have just started their third mill in the Guanajuato mining district. The Cata mill, which lies very close to the administrative buildings, and it wasn't on their property until the Great Panther acquisition of their properties in the Guanajuato district. It was on care and maintenance, and they've been able to start it right up with very little needed added investment in order to get it in operating order. They'll run it at 8,000 tons a month from production from its San Ignacio mine that they also acquired in that acquisition, and they expect the recoveries initially in that something below 85% range for silver and gold. So it's a third mill running. It does add to the operating costs of the mine, of course, because of the added staffing in order to get it up and moving and that sort of thing. It doesn't necessarily increase the needed number of miners, but it should add a little bit to the OpEx of the operation, I think, until they get it scaled up to its intended 20,000 tons a month by year end.
Yeah, I mean, if people haven't got the hint yet, because we talk about it quite a lot, we really do like Guanajuato Silver, and it's a great way of playing the silver market. And right now, gold, silver, and copper, good places to be, I think, in commodities. But let's keep going because we've also had a few other things. And we've had, talking of gold, we've had Shanta Gold.
Yes, that's right. Shanta Gold with the Q4 and full year production statement out here. At the 31 December, they had 13 million US in cash, as opposed to a gross debt position of 24 million US. Their operating costs and their all-in sustaining costs over the quarter showing the inflationary cost product impact in Tanzania on consumables. So their operating costs in Q4, $1,112 an ounce versus $918 in the prior quarter, and all-in sustaining costs at $1,347 an ounce. So it's good that the gold price is rising now at this stage because it means that the margins on gold production going forward are being retained as opposed to being shrunk by the inflationary underlying costs. The Singita project, which is their new mine coming on, is now at 98 or 90% completion and is on track for its first production here in March prior to the end of this quarter. So looking very good there for a nice growth in gold output for the coming year for Shanta.
Sounds good. Also, how are things looking for the mineral sands play, Kenmare Resources?
Yes, we had Kenmare Resources out also with a statement on its results for Q4, and that had a lost time injury frequency rate, which had actually risen a little bit here. So you want to get control on that, although it's not really serious at just 0.09 per 200,000 hours worked. Shipments they had in 2022 were a total of 1 million tons for a 16% decrease compared to the record tons of 2021. They did increase their 2022 dividend, however, by 51% to just shy of 11 cents, and that was paid in October. Their guidance for 2023 is to be pretty much flat on volumes and or slightly lower, but their costs are expected to rise again due to these inflationary cost pressures in consumables, including energy in Africa. So we're looking at rather steady as she goes statement here out from them, and they had cash and equivalents of 108 million at the end of the quarter.
All right, that's probably enough today, Paul. I think there was 4 good stories there.
Yes.
So let's call it a day there, and we'll speak again and see what news there is tomorrow. Thanks.
Very good. See you then.